But Vinay Jaising is with us. He's Managing Director, Portfolio Management Services at JM Financial Services. Vinay, great to have you with us here. Thank you very much. Just a quick word to begin with on, I'm looking at what you own and what you like, right? Across the board, Make in India theme, IT services, FMCG. So in the Make in India theme, just your thoughts on HAL, Hindustan Aeronautics, which I think you do own, you do like. Where are valuations at for HAL, Vinay? And would you assign the same kind of valuations that capital goods companies get? Because if you look at capital good valuation, they are far higher than defense manufacturers, especially the likes of ABB, Siemens, etc. Because the industries are broadly overlapping, right? The same kind of industry structure. Go on.
So thank you so much for this question. When we looked at the defense sector first, we thought it could be a secular growth part of our business. But that's when we realized that what the Indian government is trying to do, they're trying to make more and more of manufacturing come into the country, replace them from what was being coming in from the rest of the world into the country. So what that would do is, that would reduce our import bill and the dependency on the country would increase. So our perspective, why do we like Hindustan HAL? First reason, good growth, of what they are doing in terms of the overall supply of planes. Second, more importantly, Tejas is doing very well. Third, India's manufacturing, the government's mandate to manufacturing increase in the country would lead to higher ownership for the Indian manufacturers, up from 25% to 40-45%. So two trajectories: as the Indian pie of defense grows, HAL grows. Second, as the India manufacturing space increases and as Indian planes are made more and more, HAL gains further. In terms of valuation, the stock is at 1 year forward multiples of 2022. For me, it's not the growth of 23 or 24, which is tepid, but as our analyst tells us, the 25-26 growth would be even much higher at 15 to 20%. So this leads it to be a core owning in our sector. Moving to your second question of capital goods, I clearly believe the valuation of this company can be a lot better. It could be sporadic because the government could give them orders every 1 to 2 years, but they have an order book for the next 3 years already filled. But when it comes, people will keep on raising earnings estimates. And for me, it's a better way to play the industrial or the capital goods sector, which is why we like Hindustan Aeronautics.
Vinay, afternoon. Rima here. Just to get the big picture in, it appears that the uncertainty related to China slowing down or the peak Fed hawkishness is largely in the price. We've been talking about it all over the world for the last so many months now. The earnings season is largely behind us. What are the triggers the market should be sensitive to from here on?
So two things, when we say it's in the price, there's something which our macro analyst showed us just yesterday. His point was, if you look at MSCI India in rupee and MSCI India in dollars, MSCI India in rupees is up a bit and MSCI India in dollars is down about 5 to 8% in the last year. So you've seen a 12-13% plus dollar appreciation. The rupees moved from 70 and change to 82. So when we see even the index at 18,000 levels, if you knock it off for the foreign investor, you're probably at 16,500. So we largely agree with you that, the markets, not just world over, but India, though it's flat, foreign investor, it's as good as being down 14-15%. What to look out forward? Again, back to what US is doing. US is doing a 3-point strategy. First, it's hike rates at the fastest ever rate, which we've seen in the last couple of decades. 400 basis point increase in the interest rates. That's unprecedented. All of it, in a very short period of time. Now the question is, the next rate hikes could be slower, but there are rate hikes. If earlier analysts or economists felt that number of interest rate could be, peaking at 5%, they could probably look at it peaking at 6%. That makes the US currency also, a lot more attractive compared to the Indian currency. The second is, even when you reach that rate, how long will that interest rate remain at that level? And that's where you get pain or slowdown in US coming in. And the third trajectory really is, when does it correct? So you've got two trajectories left, for the market to see and test. And these days, this will only be seen when you see earnings cut, both for the economy as well as of sectors. So, the world is undergoing 6 months to 12 months of pain, because that's when this whole story would unfold.
Hi, Vinay. I wanted to ask you about the two big themes, the pillars of the market, the IT space as well as the banking space. You have been relatively cautious on the IT space. You have some exposure to Infosys, but I think the overall stance was you're cautious. So are you sticking with that? And also you have been buying private sector banks. But what about the PSUs? They are the ones that are really moving. Have you allocated any money to the PSU banking space that valuation-wise have some comfort?
Sure. So let's look at all these three questions, actually, not two, which you said. But first one, the IT space. We are underweight the IT space because of the same comment I made earlier. The interest rates in US have moved up. The 2-year chart today is at about 4.6% for US as compared to the 10-year chart, which is at 4%. So there's a negative interest rate between the 2-year and 10-year chart, which means there's a lot of pain in US in the short term. When this occurs, what we typically believe is in the next 6 to 12 months, you'll see a slowdown in the orders given by the global corporates to the IT companies, and you could start seeing earnings getting downgraded. So we're sticking to that stance of being 50% underweight in the IT space. We like the dollar play, which is why the Make in India becomes a lot more important. Wherever you have those companies where you're getting exposure to the dollar, but having raw material coming from the country. Second theme, banks. If you look at the loan book growth of banks, every month it has been inching up. Today it's close to 18%, similar to last month, 17.9 to be precise. Now that number is fantastic. If you compound it, you're saying in 4 years, you're going to have the loan book growth doubled, right, from today's level. Having said that, the interest rates also for India are moving up, but not as fast as the rest of the world. The capital adequacy ratio for the big banks in India, or the private banks, are between 18 to 22, 23%, which means they are comfortable and they can capture growth, which is why we like the private banks. Having said that, we also own the biggest PSU bank in our portfolio. And we like it. The results were fantastic of SBI. But incrementally, what we're seeing is in the private banks, we're seeing a comfort level in valuations in line with the public sector banks. But more importantly, the capital adequacy ratio is much more comfortable, which means they can grow before they come to the market to tap for more equity.
Vinay, at the outset, we must thank you for joining us in the day when, the match is going on. So thank you very much, for joining us today on the show. But you were talking about the banking space, just turning your attention to the FMCG path. In that, you've picked Tata Consumer. Could you tell us why?
Lots of reasons, apart from the fact that I like coffee. But what's really important is if you look at the way Tata Consumer and the new CEO, who's not new anymore, it's been a couple of years there, how he's made the food chain grow out there. If you go to Amazon.in and just put Tata Sampann, the number of products you'll get, which is really made FMCG ready foods, is amazing. The way the margins in the salt business is growing is great. The way Starbucks is, going to get a lot more profitable in the times to come. The number of outlets of Starbucks are still a trifle of what they are in China, and that's increasing. So you've got too many triggers on for Tata Consumer, which is leading to their growth rate in earnings to being between 15 to 20, 25%, much higher than most of the other FMCG names, which is why we like Tata Consumer.
Okay, Tata Consumer. Bharti, Vinay, what's your view there? I mean, actually, it's one of the few businesses where we are actually seeing earnings estimates moving higher.
That's right.
One of the very few sectors, right? Otherwise, even for sectors like banking, earnings are holding. I mean, autos, earnings are holding. They're not rising expectations. But here, they are rising. Your thoughts?
So I think perfect comment made by you, right? Our biggest concern for India are two. One was the currency, which I mentioned earlier, and second is the earnings trajectory. As inflation comes down, we'll start seeing earnings being cut by 4 to 5%. So, we won't be surprised if the Nifty EPS goes to even 810 levels 1 year forward. Having said that, as far as Bharti is concerned, Bharti has a three-pronged strategy. The first strategy is just as you keep on digitizing, as you use more and more of the data play, the traffic increases. So that's the first thing, make a consumer who use a lot more of gigabyte per day, per month. Second is you start moving to higher ARPU customers. So the same person who is using lesser in terms of data being given unlimited at a point of time would get charged. So, the ARPU times, the customer, you get the revenue pie increasing. And the third is increase the speed, move from 2G to 4G. They have a lot of 2G customers, and from 4G to 5G. So you give better speed, increase your usage, and charge a bit more. The ingredients of all this is higher revenues. Incrementally, if you see the last couple of quarters, the incremental margin which comes on incremental revenues for Bharti is way above their 40%. It's closer to 60 to 70% because their variable costs, are limited, and fixed costs, don't have more costs coming in incrementally, which means that, their margins will improve, and that's why as you have your EBITDA increasing, your bottom line increases a lot more further. So we are very positive Bharti as well.
All right, very quickly, Vinay, you have also highlighted that credit card spends are picking up, a quick question is with regard to, do you play this theme via the only listed credit card company or via the banking space?
You can do both. So, you can play this game by the credit card company listed place as well as the banking space. Lots of the private banks, Kotak in particular, do not have their listing, and they own 100% of it, ditto as well as ICICI. So technically, you can play this theme of credit cards by using the private banks, which we like. HDFC is a leader in the credit card space in India. It had some hiccups, but it's back, and we like that company as well.
Vinay, thank you very much for your time. It's a pleasure as always, and a great chat. Thank you very much.
Appreciate your time.
Well, that's Vinay Jaising with his thoughts.